Okay, so what's an eligible employer? An eligible employer is one who's had a turnover decrease of either 50% or 30%, depending on whether you're under or over $1 billion in turnover. Now, if you're over $1 billion in turnover, your contraction needs to be 50%. If you're under a billion in turnover, it's 30%. How do you test what your turnover is? It's aggregated turnover. So in the lead up to the legislation, we had a few fact sheets that were out, and it wasn't entirely clear what was in and what was out and whether you grouped, but the final legislation has made it quite clear. It's an aggregated test. So the aggregation means you include affiliates and connected entities in Australia and overseas. What that means is commonly controlled or controlled, okay, entities. Now, if you're talking about what we call significant global entities, that can mean it does push you above, and we will speak about that a bit more later. Once you determine whether you're over or under $1 billion, the next thing you look at is the projected GST turnover. Now, projected GST turnover is basically what you put in the BAS, taxable supply. Okay, you exclude input tax suppliers, anything supplied for no consideration, suppliers that are not connected to the Australian enterprise. Okay, suppliers not connected to Australia. Transfer of capital assets is an important one, or suppliers connected to ceasing or substantially or permanently closing by size or scale. So they're not penalising you and including in your turnover if you're forced to sell assets during this period in order to rationalise your business. They won't be included in your turnover, and because those could also result in abnormal increase in turnover during a measurement period, and neither will they include anything that was required to downsize or cease your business. Okay. It's tested against a corresponding period last year, and you have a choice. We initially thought it might be based on your GST cycle, whether you're quarterly or monthly, but it's clear that you can choose to be quarterly or monthly. Given it's measured against the BAS, the method by which you report GST probably will make a difference with your cash or accruals. And the important thing is once you satisfy the test, you don't need to satisfy it again. So if you satisfy it, say in April, then May and June actually turn out to be okay, and maybe you're not under 30%. The government has said it doesn't matter. You'll still qualify. Okay. Likewise, if later on if initially you don't qualify, later on you will qualify if you pass the test because of the way you measure it, and we'll touch on that more later. Now, often a question asked is, what of the businesses who just started? They were restructured. They had lumpy turnover. What do we look at? And initially through the fact sheets, we had what we thought was ATO discretion. Some of the later fact sheets said about demonstrating you were adversely affected by COVID-19. Now, the final legislation actually introduces what's called an alternate turnover test. Where there's no appropriate comparison period, new businesses that started or there's major acquisitions, an alternate decline in turnover test may apply. Now, the issue with this is that the legislation quite clearly states that ATO will determine this based on legislative instrument. Legislative instrument meaning a law of some sort has to be passed. So whilst initially we thought, well, ATO will they will have some discretion and might bring out some practice guidance or release from the bill, it looks like legislative instrument will be the way that they'll be exercising this. So we're still not entirely clear on what this alternate turnover test means. Not-for-profits and charities. Okay, this is an interesting one. So NFPs and charities qualify as well, as do private schools. Okay, government bodies, local governments, government entities, public schools, government schools don't qualify. So they've made that very clear. If you're a charity and you register with the ACNC, you don't need to have a 30% contraction in turnover. It only needs to be 15%. Now, initially, early indications, press releases, fact sheets indicated that some private schools, say faith-based schools, or other private vocational education bodies might only need to have a 50% reduction in turnover. But the final legislation release made it very clear that registered charities, charities registered at ACNC are the only ones that meet this 15% turnover decline eligibility. So if you're a faith-based school that's also registered with the ACNC, you're actually excluded. So it's important to note. So those entities still need to have a 30% reduction in fees. The next key concept is eligible employees. Now, as I touched on earlier, an eligible employee is anyone who's an Australian citizen, PR, or a New Zealander living here on a 444 visa. And they've got to be tax residents. So you might have a 444 visa, but if you've gone back to New Zealand and you're no longer a tax resident, you won't qualify. So that's the fine print there to remember. Okay, and that time you measure is on 1st of March. So that's the reckoning date. It's got to be full-time, part-time, or long-term casual, which is 12 months at that date as well, 1st of March. And you've got to be 16 years old on 1st of March. Okay, so if you've got someone who's working in often hospitality, fast food outlets, and they're not quite 16 yet, at 1st of March, if they weren't 16, you do not get it. Okay, important to know that. If the staff member is on paternity leave, okay, they will qualify, will be an eligible employee, rather, but they can't be in receipt of the parenting payment from Centrelink. Okay, so it's those who have already received it and maybe they're taking the rest of their maternity leave to be at home with a young child. If they're not receiving the parenting payment, they will qualify and be eligible employees. What about those who are on workers' compensation insurance? Well, if they're on workers' comp and doing nothing, so they're just at home because they cannot work, they won't qualify. If they're on workers' comp and working for you reduced hours, because they can partially work, they will qualify. Now, if you laid people off and you think that, oh, actually, I can actually use those staff at the end of this and I want to re-engage them, they will qualify, just back to that original condition, were they employees on 1st of March. And importantly, is a new one in, all in rule. So this wasn't made clear in the fact sheets, but it's clear now. If you choose one employee, all employees are in. You can't cherry pick. Now, the amount of the payment is $1,500. That's been widely publicised, and it commences the fortnight commencing 30th of March. So the first fortnight cycle, as the recording of this video, today being the 15th, has already happened. Okay. You can't pay your employee less than this. So some employees will receive a pay rise. For example, if someone only works 2 days a week, say they stay at home and have home duties other times, and this is a part-time job that suits them, if they're an eligible employee, they're actually going to get a pay rise because you must pass on the full $1,500 to them. The mechanism is you receive it and you pass it on. Okay. Now, the form of payment to the employee can be salary, wages, bonuses, commissions, but also extends to salary sacrificed amounts. So they've said that if the person was salary sacrificing to super or other, say a car salary sacrifice arrangement, that's still acceptable. There's a form of payment that meets the qualification because the government wants to ensure that employers don't pocket this. This is a wage subsidy paid to employers to ensure that they're not out of pocket for paying for wages. Okay. Importantly, PAYG withholding applies. So when you make the payment, you do have to withhold PAYG withholding. And if you don't have a fortnightly payment cycle, because they've always used this term fortnightly, which is still common in Australia, a fortnightly payment cycle, say you pay monthly, so long as you reasonably attribute the payment to the correct fortnightly cycle, then you're fine. Okay. The big one is self-employed. So we hints of this all through the fact sheets, and they said, okay, what about those who are self-employed? If you're a business person and you trade through an entity, you will qualify, and they've made it clear interposed entities will satisfy as well. So if you're a sole trader, it's easy. Provide your ABN, you are the sole trader, that's you. You will receive the $1,500 a fortnight. Same as with a partnership, you provide the ABN for the partnership, and you nominate one partner, okay, one natural person partner. If you've got an adult trust, you've got a trust through which you trade, you nominate one adult trust beneficiary. If you've got a company through which you trade, you nominate one company director or shareholder. Okay, so it's allowing for one one business person to also receive the payment. Same qualifications. Must be Australian citizen or PR, or New Zealander here on a 444 visa and a tax resident. The person must be actively involved in the business. The ABN has to be active at 12th of March. That's important. Okay. And with the business that's attached to that ABN, you must have reported income for the year ended 30 June 2019, or you must have lodged a BAS any time between 1 July 2018 and 12th of March 2020. Okay, so this is kind of an integrity measure to ensure that people don't quickly go out and get ABNs and just do it for 1 month to just get the JobKeeper subsidy. So looking to see that it's a genuine business, that you've been doing something. The same exclusions apply. So I spoke about parental pay, those receiving parental payments from Centrelink, etc., on workers' comp who are not working. Same exclusions. If any of those exclusions applied, if you're an employee of someone, then if you're self-employed, the same exclusions apply. Next, we'll look at the practical aspects.